Hey guys, it's Hannah and this is the weekly market wrap-up. I hope you all had an incredible week. I do want to remind you that you can always email me at hannah@viralnetworkinc.com. Andrew emailed us last week and gave us some great things to cover, so keep those emails coming. Let's get to what happened this week as markets are being heavily affected by the potential U.S. military strike against Syria, which has capped much of the enthusiasm for domestic markets. First, let's talk equities. U.S. equity markets posted slight gains on Thursday, with the Dow Jones adding 6 points, while the benchmark S&P 500 moved up 0.1%. Trading activity has been noticeably lackluster as the domestic markets are struggling to gain positive traction. In the bond market, 10-year yields have hit a near-term high of 2.98%, further accentuating investor confidence. It's clear the uncertainty over Fed tapering is playing a crucial role in a lack of enthusiasm, which can be felt in domestic markets. While the American Association of Individual Investors survey shows that only 35% of market participants are bullish, with the remaining either neutral or bearish. Enough from equities and over to currencies, where notable shifts occurred in the Forex market. The US dollar was range-bound for much of this week until a fairly sizable pop occurred early Thursday, as interest rates shot up. Look for more movement as Friday's job report comes out. The dollar-yen pair has been moving steadily higher and punctuated the 100 mark in the early trading as statements made by the Prime Minister of Japan at the G20 summit reiterated the Bank of Japan's policy towards lifting the economy. The euro-dollar pair took a noticeable dive Thursday as European Central Bank President announced that the EU will continue to promote an inflationary policy to foster recovery in the region. Well, that's it for currencies, and now it's time to focus on our winners and losers for this week. The winner this week is Ford and ticker symbol F. Shows how long they've been around, hey? While rising over 2% today, Ford shares are up nearly 6% for the week as industry reports suggest that automobile sales are at 2007 levels. Investors are buying into the improved outlook for this industry, with Ford shares currently trading hands at a rate 18% above its 3-month average. Where there's a winner, there's a loser. And this week it happens to be Conn's Inc., ticker symbol CONN. The consumer goods retailer dropped over 12.5% after second quarter earnings missed analysts' expectations. The sell-off was especially steep considering that volume was 13 times larger than its 3-month average. Last but not least, let's turn to precious metals. Gold and silver took a massive hit this week as Fed tapering concerns weighed heavily on the bullion market, with both metals down below important psychological price points of $1,400 and $24 respectively. However, it should be noted that technically the metals have not breached the support lines of their current trend channel, and we could be seeing a correction within a greater macroeconomic cycle. Palladium was a major disappointment this week as it gave up the $700 threshold over the last 2 trading sessions. Global uncertainties have weighed heavily on the commodities sector despite an improved outlook for the automotive industry. From a long-term perspective, Palladium is within a bullish trend channel, although the near-term outlook could get pretty choppy. And that wraps it up. We love having you join us every Friday, but if you want more from VNN, make sure to subscribe to our YouTube channel, like us on Facebook, and follow us on Twitter. Have a great weekend, and as always, I'm Hannah Bernard for VNN.